The very same company that broke Wall Street is now aiming that same force at Bitcoin. The original meme stock just confirmed that it's going all in on Bitcoin. But this time, it's far from a meme because they're about to inject $1.3 billion into Bitcoin and use it as a strategic treasury asset. This is going to spark the next wave of Bitcoin adoption. So make sure you watch through this whole video because I'm going to help you to understand why this move can make smart investors extremely wealthy. Now, let's dive in. From meme stock to Bitcoin will. GameStop's $1.3 billion power play explained. By now, you've probably heard of the name GameStop. It's a game retailer, and its name got extremely popularized in early January 2021, where through a subforum on Reddit called Wall Street Bets, a bunch of investors came together and started to speculate on the price action of GameStop. So at that time, GameStop was actually one of the, it was one of the companies that had the biggest amount of short positions opened because investors expected that the company would actually go bankrupt very soon. So all of these investors on this Reddit subforum came together and they did an analysis and they calculated how much money they had to pump into the market in order to liquidate the positions of a few large hedge funds that were shorting the stock. And the biggest one of those hedge funds was 𝗗𝗶𝘀𝗰𝗋. And these Wall Street Bets investors, led by their leader Roaring Kitty, started to pump money into GameStop, and everyone followed, and they all piled up their money into GameStop, and it actually did what they expected it to do, because some of these positions that these hedge funds were opening were actually being liquidated. This caused them to buy back into GameStop at a much higher price in order to cover their short positions, and this drove the price of GameStop up even higher. So here's a graph showing that GameStop was hovering between $90 and $100 all the way to 10 a.m. on January 25th, where suddenly the price of GameStop spiked and it went all the way up to $160 per share. And later it dropped down again and it went to somewhere around $70, $80 per share. Now, this didn't just happen once, it happened twice. So here you see much later, if we compare the GameStop stock compared to its January 1st price, then it shot up quite drastically with a 1700% gain in the first rally, and in the second rally it went up with 1300%. So those are very crazy price increases. And this was the very first time where retail investors came together and they actually destroyed the big players on Wall Street. So one of those biggest players, which I mentioned before, is 𝗗𝗂𝗋𝗆𝐿, which was led by 𝗗𝗶𝘀𝗰𝗋. And because they had such a big short position open during this whole GameStop phenomenon in the market, they were actually wiped out and they lost billions of dollars, I believe $3 billion along the way. So yeah, that was a very big win for the retail investing community. And this brings me to the following. So this whole story of this GameStop short squeeze, and that's exactly how we call it. So when a lot of people are shorting a stock, and when you then try to pump up the price of Bitcoin in order to liquidate those shorts, that's what we call a short squeeze. So now we are roughly 4 or 5 years after this short squeeze event, and now we're seeing another, a lot of new hype around GameStop. Where's all of this new hype coming from? Well, it's all coming from this recent announcement that GameStop and their stock ticker symbol is GME. They're going to raise $1.3 billion in order to purchase Bitcoin. Sounds like a page out of the playbook of Michael Saylor, which we regularly feature here on this channel. But in any case, they're going to raise money in order to buy Bitcoin. So here you see a more detailed announcement. So breaking, GameStop plans to offer $1.3 billion in a 0% convertible senior notes, which are due in 2030 in a private offering. Proceeds will go towards general corporate purposes, which includes the acquisition of Bitcoin. So here is a full announcement, which you can find on the internet if you want to dig into it yourself. But yeah, the most important thing is that they are clarifying that these proceeds can be used to buy Bitcoin. Yeah, here is a full announcement. I recommend you to check it out on Google if you want to dissect it in further detail. But I'm going to give you the rough outline of everything that you need to know in this video. And hey, by the way, if you enjoy watching videos like this one, where I help you to make sense of everything that's going on in the financial markets, in the crypto market, then make sure to smash the like button and subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on and to help you to position yourself for maximum profits. So yeah, let's continue. So here, according to this tweet by Bitcoin Archive, they have come to the conclusion that GameStop can service a loan of up to $100 billion for 4.6 years with its existing $4.6 billion cash balance at 1%. That's twice the amount of Bitcoin that Michael Saylor's strategy currently is holding. So the whole point of this tweet is to show that GameStop, because of what happened in the past, because of this whole short squeeze, which pumped up the price of GameStop, they were actually able to gain a lot of cash by selling some of their shares while it was going up quite significantly. And at the same time, you know, they regained popularity within the world of investing and within the retail market. They actually managed to accumulate a significant treasury war chest of $4.6 billion in cash. And yeah, they can actually, if they wish, they could financially engineer a scheme that would allow them to buy up a lot of Bitcoin by borrowing money on the debt, on the debt market. And to give you some context, with this financial scheme, they would be able to raise almost twice the amount of Bitcoin that Strategy has right now. So Michael Saylor's company, which is currently holding around 500,000 Bitcoin, roughly 2.4% of all of the Bitcoin that will ever be in circulation. And after the market heard this news that GameStop is actually going to adopt a Bitcoin treasury strategy, its stock started to soar. And that is what we call the Bitcoin effect. So recently, we've been seeing that many publicly traded companies have started to adopt Bitcoin as a treasury reserve asset or strategic reserve asset. And the market validated their moves by pumping their stocks. So meaning that the market is actually valuing and appreciating that move. And the same is happening with GameStop stock right now. So here is an article by ABC News, and they're saying the company, and in this case we're talking about GameStop, has around $4.8 billion in cash, and the conversion will bring its cash to $6.1 billion, he said. The stock is currently valued at $12.5 billion. So in other words, GameStop is sitting on a lot of cash, and they are going to use that cash to deploy it into Bitcoin. And well, here you see more tweets of companies which are holding Bitcoin. So just in, Tesla reports increasing its Bitcoin holdings to 11,500 Bitcoin. So Tesla is accumulating Bitcoin. And you know, Tesla is run by Elon Musk. Elon Musk is right now the richest person on earth, and he's very well connected in the government. So if his company is allocating more of its treasury to Bitcoin, then that's a very significant sign. You know, if the smart money is moving into Bitcoin, then probably they know something that the rest of the market doesn't yet know, because the rest of the market right now is very bearish. The average investor is super sour, is super panicking, and is really fearful right now that actually we've already seen the top of this bull market. And that from now onwards, we're going to go into a very long, painful bear market. But if some of the smartest people in the financial markets are now accumulating Bitcoin, what does that tell you? I'm really curious to hear your thoughts in the comments below. Anyways, let's continue with this video. Here, of Square's 669 million of first quarter revenue, around 34 million of that came from Bitcoin. So here you see a breakdown. So total net revenue was around 669 million in the first quarter of 2018. Okay, right. This was in 2018. So Square was one of the first few companies that got involved with Bitcoin. So Square is actually a company founded by Jack Dorsey, also the founder of Twitter. So yeah. And here's strategy, of course, Michael Saylor's company. Right now, they're holding around 506,000 Bitcoin, around 2.4% of the global supply. So you're seeing, some of the smartest founders in the industry. So Elon Musk, Jack Dorsey, Michael Saylor, they keep on accumulating more Bitcoin. So what are some of the key reasons why these corporations are stacking Bitcoin? Well, it has to do with the fact that the dollar is losing value very fast. And we're not just talking about the dollar when I'm talking about devaluation. I'm talking about all major fiat currencies out there. The pound, the yen, the euro, the dollar, it's all the same. Because central banks keep on printing more money. And with every single unit of money that's added to the supply that's already in circulation, it diminishes the value of money. So here you see an infographic showing the devaluing of the dollar. And again, this is a proxy. Almost every single currency out there is losing value just like the dollar. As long as money keeps on being printed, the value of your money is being eroded. So yeah, here you see that the value of the dollar has decreased significantly with roughly, 90% of its value in, I would say roughly 90% of its value in just less than 30 years or 20 years. And it lost even more in the past 100 years. So that's why people like Robert Kiyosaki, if you haven't read the book Rich Dad Poor Dad, Rich Dad Poor Dad is a book that explains in very simple words how anyone can become financially free. And he explains that savers are losers because the poor and the middle class always talk about saving money. But let's say that you're saving money in your bank account and you're earning a little bit of interest. Well, if inflation is outpacing the growth rate of your money, then you are losing over the long term, meaning that if you're saving money over a period of 10 years, you might think that, in absolute terms, you have more money in your bank account because of interest. But in reality, if you take inflation into account, you can buy less products and services with that amount of money. So in reality, your life is becoming harder. It's not becoming easier, it's becoming harder. And that's because of inflation. Inflation is the invisible tax. And it's hardest on the poor and the middle class because they believe that the key to building wealth is hard work and saving money. Here you see another example. So purchasing power comparison indexed from the 1st of January 2020. So here you see the price of Bitcoin, and here you see the devaluation of the dollar. So you see within the same period, Bitcoin increased with around 9.6 or 9.7 times, and the dollar lost around 20% of its value. So the question that you need to ask yourself over here is, if your goal is to upgrade your life and you want to make life easier, you want to master the game of life, is it better for you to save in Bitcoin, which increased around 9.7 times in value, or to hold your money in the US dollar or in any other major fiat currency which lost value? In this case, the dollar lost 20% of its value in just 5 years' time, guys. This means that if you held $1 in your savings account or in your bank account, and after 5 years of just letting it sit there idle, you would be able to buy 20% less products and services with that same amount of money. So to me, the answer is very simple. Saving in Bitcoin makes life easier. Saving in fiat currency makes life harder. Let me know in the comments below if you agree with that, or tell me your thoughts otherwise. So yeah, inflation is the silent task, or the silent tax which is robbing you. Because with the same amount of money, you know, if you go to the supermarket, your shopping cart would be a lot less full. So here you can see that the same 20 bucks in 1980 would give you completely full shopping carts with everything you need: meat, vegetables, milk, eggs. 20 years later, in 2000, 20 bucks would only give you a shopping cart which is half full. And just 20 years later, with 20 bucks, you can buy just a few items. On the other hand, with Bitcoin, you know, with one Bitcoin, you could buy a full shopping cart in 2011. Then with one Bitcoin, you could buy almost a car in 2018. And with one Bitcoin, you could buy a sick mansion in 2030. So again, which one of these two would you want to save your money in or store your wealth in? In something that decreases in value and decreases your purchasing power over time, or something that increases your purchasing power over time? I think the answer is quite obvious. It's Bitcoin, of course. Now, for us, for you and me, we're investors, we're individuals. It makes sense to put a portion of our wealth into Bitcoin. But what if you are a large company and you're sitting on hundreds of millions or even billions of dollars of cash? What would you do with it? Would you keep it in a bank account? Would you invest it in short-term treasury bonds and you earn a very small percentage? Or would you invest it in gold or real estate? Well, many of these board of directors are making an analysis, and they're coming to the conclusion that the best way to protect themselves is to invest their money into Bitcoin instead of holding money, because they're also looking at this chart and they're understanding that at this point, you know, there's almost nothing out there that can compete with Bitcoin in terms of protecting yourself against inflation, especially if you're willing to think over a longer term horizon. Because yes, you're right, on the short term, Bitcoin can go up and down in value. But if you zoom out over the long term, the trend line is up. So that's what many of those board of directors are understanding. Now, the second reason is long-term appreciation. So Bitcoin is outperforming every asset class in the past decade. Yeah, that's right. Because if you have all of these options available to you, stocks, bonds, real estate, you name it. So there's a very wide range of options available: tech stocks, the Nasdaq, gold, holding cash, investing it in the S&P 500. For the past decade, so meaning 2010 to 2020, Bitcoin was named the best asset class of the past decade. Why? Because it generated a return of around 230% per year for people that were simply buying and holding within that time frame. So 230% per year, that's insane. That in the same period, that's around 10 times more than the second fastest mover, which was the Nasdaq 100, which is a basket of tech stocks. So yeah, if you just look at the historical performance of Bitcoin, there isn't really anything that can outperform it. So Bitcoin's financial track record is attracting all of these companies, and at least they are making them consider looking into Bitcoin. Because if something is performing so well, at least it's worth allocating a little bit of time to understand it better and to see if maybe it could be a good addition to your strategy. Now, let's get back to GameStop, because GameStop isn't just doing this randomly. They didn't just, decided one day like, hey, let's invest in Bitcoin. No, there were a few events leading up to this point. And one of those events is the following. So here, Strive Asset Management CEO Matt Cole urges Ryan Cohen, which is the CEO of the chairman and CEO of GameStop, to adopt Bitcoin as a reserve asset using the $5 billion in cash that they have on their balance sheet. And here below this tweet, you see a reply from Ryan Cohen, which is the CEO and chairman of GameStop. They're saying letter received. In other words, they have received it and they're going to evaluate adding Bitcoin to their reserves. Now, shortly after that, Ryan Cohen was meeting with Michael Saylor, and Michael Saylor is the original, the original pioneer of the Bitcoin strategic reserve strategy. Strategy right now holds around 500,000 Bitcoin, and they have been advocating Bitcoin everywhere on conference events, live streams. Michael Saylor's mission is to get Bitcoin adopted very rapidly and to get as many companies, individuals, pension funds, banks, you name it, allocate a portion of their money to Bitcoin. Of course, there are a lot of selfish interests behind this because he is, of course, pumping his own bags with every additional investor that's investing their money into Bitcoin. But yeah, they met up together. They had great talks, and eventually this led to the point that GameStop also adopted Bitcoin. So let's zoom out, because GameStop adopting Bitcoin isn't just an isolated event. No, it's part of a much bigger trend of corporations adopting Bitcoin. And I want you to zoom out and I want you to understand how big this opportunity is. Because if we look at the S&P 500 alone, which is a basket of the 500 largest publicly traded companies, then their market cap, meaning the value of all of those shares of those publicly traded companies, is around $48 trillion. To give you some context, that is 48 with 12 zeros behind it. Most people can't even comprehend how much money that is, how much wealth is being stored in these stocks. Now, and we see that in general, over the long term, that market cap is only increasing. So meaning the value of all of those stocks are only increasing in value. Of course, on the short term, there are some dips, there are some corrections, but in general, the long-term trend of the S&P 500 is up. But let's say that, let's now look at Bitcoin. So Bitcoin, there will only ever be 21 million Bitcoin that will ever be in circulation, meaning that Bitcoin is the only truly scarce asset out there. To give you some examples, money can be printed, more houses can be built, more stocks can be issued, more bonds can be issued, more watches can be manufactured. Almost any asset out there you can produce more of, except for Bitcoin. And yes, new supply of Bitcoin is being added to the market, but this will only last for 100 more years, and the new Bitcoin that's being mined is only becoming more scarce over time. So there will be a hard cap of 21 million Bitcoin. And you see all of those investors which are now investing their money into the S&P 500, they also want to get the best possible return on their money. And the S&P 500 over the long term generates 7 to 10% of annualized returns on average. If you look at it over the long term, surely, for the S&P 500, there's also down years where it went down with 10%, 20%. There's very positive years where the S&P 500 went up with, 15%, 20%, 40%. But nothing beats the performance of Bitcoin over the past decade, 230%. So let's say that only a fraction of this wealth is redistributed and put into Bitcoin, of which there's only 21 million Bitcoin available. So when you take a very scarce asset and you pump billions or even trillions into it, then if you ask me, the probability that the price is going to go up a lot more is very high. I'm curious to hear your opinion about that in the comments below. If you also believe that Bitcoin is, that it can increase in value still a lot and that it's dirt cheap right now. So if some of these publicly traded companies like GameStop and Tesla are adding Bitcoin to their balance sheet, well, then maybe there are even more companies like Apple, Shopify, and AMC, which are not yet holding Bitcoin on their balance sheet, but if they see other companies out there doing it, and if the market is, validating those moves, and if it's now being normalized, then they're not going to want to be left behind. And these companies have hundreds of billions combined of excess liquidity that they could pump into Bitcoin. So that is a lot of money sitting on the sidelines right now, which is only losing value. Instead, they could be investing it into Bitcoin and actually see an appreciation in value over time, meaning that they can buy more products and services in the future by allocating it to Bitcoin instead of cash. Now, one thing is for certain, companies don't want to be left behind. They don't like getting left behind. When we look at this chart on strategy, aka MicroStrategy in the past, if we look at this chart of the returns that they have generated since adopting a Bitcoin strategic reserve, they have generated 2,526% returns in the past 4 years. If you compare it to Nvidia, that's around 898%, Tesla 189%, Meta 129%, Google 119%, Apple around 100%, Microsoft 88%. So that's orders of magnitude, higher than all of those other companies, and that's simply by allocating a portion of their cash to Bitcoin. So yes, this is triggering a whole wave of institutional and corporate adoption. Everyone wants to get a slice of this pie, and they understand that the alternatives of what they're doing with their cash right now isn't yielding very great results. So why not put a chunk of that money into Bitcoin? And GameStop is just yet another one of those dominoes within this whole almost corporate arms race of who can accumulate the most amount of Bitcoin in the shortest period of time. And Michael Saylor is, of course, at the epicenter of all of this movement and all of this change and all of this adoption, because he is actively sharing his best practices and strategies with other companies so that they can also accumulate as much Bitcoin as possible, which makes Bitcoin more scarce. And over time, if all of these billions keep on getting pumped into Bitcoin, then it will probably go up in value a lot. So what does this mean for you? So if you look at Bitcoin right now, you might think, hey, Bitcoin is at 80K, 90K, $100,000 per Bitcoin. That's very expensive. Well, is it really expensive, or is it dirt cheap? If you're understanding that right now we are still at the beginning of mass adoption, we're now seeing that a few publicly traded companies are buying up Bitcoin. We're seeing that a few pension funds are getting into Bitcoin. We're seeing that a few countries are starting to consider Bitcoin strategic reserves. But we are still so early. When this becomes the norm, when every company, every country, every individual only allocates 1 or 2 or 3% of all of the wealth to Bitcoin, which is just a small position in their entire portfolio, then it could mean that trillions are going to flow into Bitcoin. Bitcoin right now is a $2 trillion asset. Gold is a $20 trillion asset. I believe with all of the adoption happening out there and the alternatives that people have that they can allocate their money to, I believe Bitcoin is getting ready to overtake gold as becoming the primary store of value and safe haven asset in the financial markets. And with all of that money flowing into Bitcoin, I believe that the future of Bitcoin is very bright. And if right now we look at Bitcoin's price, it is dirt cheap. So let me know in the comments below if you agree with that. And if you enjoyed watching this video, do me one quick favor. Please smash the like button. For me, that's good feedback to know whether you like this video or not. And if you aren't yet subscribed to my channel, also make sure to smash the subscribe button, because I'm going to be publishing regular videos just like this one to help you to make sense of everything that's going on and to help you to maximize your profits in the crypto market. My goal is to help as many of you to cross the finish line. I know it's very hard if you don't have access to the right information or someone that can help you to make sense of all of this. So that's going to be my goal. I'm going to be here in the trenches with you, and we're going to do this together. All right. Hey, thanks for watching. Peace out. Take care, and I'll see you in the next one.